everybody. This is Jay Young with the Jay Young Show. Excited today. We have an economist, and I need to know more about the definition of an economist and exactly what supply and demand and all this. But I got Jordan Soto here with me, my co-host on the show, and I'm really excited to hear about Jordan and what she's been doing. But also, everybody come in and meet Tim Snyder. Tim, welcome to the Jay Young Show.
Thanks, Jay. It's good to be with you and Jordan both.
Absolutely. So you're economist or economies of scale, or you're talking about energy, oil and gas prices. Is that what you – tell us something about your background and what you specialize in.
I'm a degreed economist. I work in oil and gas. I also work in finance and banking and a couple of other disciplines as well. Our primary focus, as you well know, is obviously the Permian Basin and, of course, oil and gas, and what opportunities we have for our Texas producers and the United States. I am what is considered an applied economist. An applied economist is not the guy that sits around with his glasses scrubbed down his nose and he's doing it on a computer. I'm the guy who sits down with corporations and with producers, and I help them understand what benefits they could gain from the macroeconomic factors that come across and all the little bitty things that we deal with on a daily basis.
I got you.
Yeah, and you, Tim, you have also founded your own company back in 2005. Is that correct? What motivated you to get that started?
Well, we were helping a number of organizations work on the renewable side. And one of the things that we discovered is there was this chasm between the renewables and the oil and gas producers. We worked hard and heavy to make sure that we could tie those groups together. I can tell you in 2003, there was an attempt to bring renewable energy. Obviously, we were talking about ethanol at the time and biodiesel onto the fuel mix. That was opposed strongly by Texas Oil and Gas and a number of other producers. We worked hard and heavy with those groups, and we came up with a good compromise. And I began working specifically with the oil and gas producers when we put together RFS 1 and RFS 2 for the Bush administration. From that point, I've been working specifically with both upstream and downstream. I've done a number of presentations for groups all over the country. And, it's been a great opportunity to grow. Matador Economics is my company. I write a daily energy commentary for 2,500 or 3,000 subscribers. We work with many groups trying to provide information that helps them grow as we move forward. And this is a crazy time. We've not only got politics to deal with, but geopolitics to deal with. And as Jay said, supply and demand and all the little bitty things that really affect that. So there's a lot going on right now, and I'm excited to be here with you guys.
It's awesome. I'll tell you what, and we're going to talk about the election. I mean, we have an election coming up. I'm not sure who's going to run on both sides.
Joe Biden's out, so, there's a new entry there. But as you said, it's such changing times. But this is not the first time that you've been through a lot of challenging environments when it comes to economics and election and downturns and upturns and all of the craziness that comes with that. I'm intrigued by you starting your company in 2005 and then the economic crash that we saw in 2008.
Yep.
A lot of people are really concerned about where the financial markets are heading right now. Do you see similarities in what you have seen and now, or is it a totally different game?
It's funny. I look at where we stood in 2008, and investment for lots of opportunities just basically vanished. We had a real issue. But then, look at what we did up into 2011, 12, 13, and we grew, past that 9 million barrel per day number that we had in production here in the United States up to about 11.1. And then, we started to put things back together. Now, money didn't just evaporate it moved to the sidelines. And so what we had to do is give a compelling story as to why we needed to bring that money back into the marketplace so we could use that to help grow and develop our oil and gas opportunities. And that's where I kind of find ourselves today. We've seen since 2000, I can tell you when President Biden came into office, production here in the United States for crude oil was 11 million barrels per day. We knew that the Biden administration was going to be negative to oil and gas. And so what was anticipated, and unfortunately many times was reported, was that our production had dropped or was going to drop in the United States. It did not do that. It did everything but drop. It increased. Today we're at 13.3 million barrels per day. And so that is good. And oil and gas, and the oil and gas producers here in this country, the E&Ps, exploration production companies, are the ones that single-handedly, and service companies are what single-handedly saved the economy of this country. Had we not had that, we would have seen inflation double what we saw in 2022.
Wow. What do you think the percentages? I mean, do you think if Trump gets in, Kamala Harris gets in, what's going to happen to oil and gas production in let's say a year, 2 years?
Jay, I had a conversation yesterday with I call him a young man. He's younger than me, so that's a good thing. I had a conversation with a young man that owns a service company, and we were kind of talking about what how do we feel in the Permian Basin right now? What do we think? What are we seeing? We're seeing activity. We're seeing growth. We're seeing jobs being created. We're seeing opportunities out there. The industry itself is excited about hopefully getting the jackboot off the neck of the exploration and production companies here in this United States. That's a very serious issue that we're dealing with. It's not just the cost of the permits and those things we're dealing with. It's also the timeline. And we all know time is money. So
yes,
all these issues come together and we find that there's some optimism as we're growing. And that is strictly coming from the fact that we're going to obviously now 100% replace Joe Biden, but there's the opportunity to replace it with somebody who believes in drill, baby, drill, who believes in production that helps stabilize this economy. It was not managed appropriately once this new administration came into office.
Yeah. I'm just thinking about the standpoint, and Jordan, I don't know what you think, but I'm just thinking about, I had dinner with Mark Cuban back in 2000. Oh, the second Obama election, and there's a bunch of us. There's like 5 or 6 of us, and we're having dinner, Nick and Sam's, and it was election night, and all the TVs were on the election, and Mark Cuban says, "Oh yeah, hey, well I voted for," or somebody said, "Who'd you vote for, Mark?" And he said, "I voted for Obama." And everything got kind of quiet, and everybody's like, "Oh, okay," Not that we're a bunch of Republicans, but there was probably more Republicans at the table than Democrats. And somebody said, "Well, why did you invest, or why did you vote for Obama?" And he said, "Well, I just didn't know what I was going to get on the other side." He said, "I know what I'm going to get with Obama and Obamacare, and I've got all these businesses. It's all set up. I don't have to worry about it. It's like a business decision more than a personal decision or hey, I'm a Republican or I'm a Democrat, period, end of story." It's different because here you have, Biden or Kamala Harris, and you're thinking that oil and gas production shouldn't be going down because they're restricting. But with Trump, you think the production is going to go up. And I don't know if that's such a good thing or not, because if you go from 13, like you said, 13 to 14 to 15 million barrels, which I don't know if we can or not, but if we could, that's going to be more supply on the market than demand, and the oil price is going to go down. I don't think that oil and gas companies really want to see $30 oil. I mean, I'm sorry. I mean, I know that drill, baby, drill means something to some people, but Jordan, what's your take on that?
Oh gosh. I think whenever we're talking about this, I've been to so many conferences and hosted so many conferences that have talked about Democrats being in office versus the Republicans being in office. And I always find it very intriguing whenever it comes to that conversation. And some people believe that when Democrats are in office, it's actually better for oil and gas companies. So I've really heard both sides of it as I've done some research and been a part of those conversations. But I'm going to leave that to the economist here that we have on. In your expert opinion, what have you seen traditionally? And furthermore, I'd be interested to know, have you made any predictions that have come to fruition or come to pass that you've made in the past regarding specifically political figures taking office?
Well, yeah, let's start off at the beginning of this conversation when Jay was talking about he wasn't sure if it was a good idea to increase production and lower the prices. The issue we're dealing with here is quite simple. It's the difference between Keynesian and classical economics. Keynesian economics tells you the government's going to give to you. That's what you get with the Democrat operation. That's what you get when you sit like a Mark Cuban and say, what am I going to get from this particular administration? Classical economics tells me that I'm going to produce for myself. I'm going to be the one that's going to generate for our economy, our energy economy. And those are the things that we look at. From the standpoint of predictions, I can tell you in 2020, I was concerned, this is just before the pandemic, I was concerned that we might have a black swan event beginning to brew. We were all watching as the development of the coronavirus was coming across the ocean and heading towards the United States. And we had, I believe it was the 21st or 22nd of January, we had the first death in the United States from coronavirus. I looked at that and I said, you gotta have a plan. And in any good business plan, you have an entrance strategy, an operating strategy, and an exit strategy. And we had no exit strategy coming out of the coronavirus. That's the problem that we dealt with. And then when we compounded this whole issue by adding a different president, a president from a different party, a party that is opposed to drilling, to oil and gas, has been trying to kill oil and gas and trying to replace it with renewables that are part and parcel more expensive than what we see in the fossil fuels. I'll share with you a meeting that I attended. This is probably about the same time that Jay was having his meeting with, or having the dinner with Mark Cuban and 6 other people. I attended a meeting in Golden, Colorado at the Renewable National Energy Laboratory. The Undersecretary of Energy was there giving a talk on oil and gas and where we were with renewables and the things that they were working on. One of the things that she said was we have missed the boat here in the United States and in the world by not applying the extrinsic and intrinsic costs both to what our consumers pay at the pump for our fuel products, not realizing that you're not supposed to ask questions in those kinds of settings. I raised my hand and I said, can I ask you a question? She said, sure. I said, well, what are you talking about? This is 2011. This is April, actually, of 2011. She told me, she goes, well, I'm expecting to see, we should see gasoline prices between $7.50 and $9 a gallon. And we should see diesel fuel in the neighborhood of $14 or $15 a gallon. You tell me what that's going to do to the economy if you don't manage your input costs and you add these extraneous costs that are basically coming out of the blue to put a bind on not only the economy, but on the individual in that economy. And that's what they were planning on doing. I hate to say it, but we pretty much saw most of that develop and happen.
Yeah, it is interesting as you look at that conversation. I remember whenever I was younger in elementary school and we were talking about a similar issue of diesel prices versus gasoline prices. And I remember the guide telling us at the time, he was like, you're going to see gasoline get up to $4 or $5 just as the diesel prices are. And they're going to be the same. And diesel's actually going to end up being cheaper. And I remember very vividly as an adult then seeing what they had predicted come to pass. And it was just so shocking because it was like, wow, what an environment. And then to see, so when we're looking at those trends and you're making those predictions as others have made predictions, what are key indicators of big changes coming up? I mean, obviously coronavirus, we had seen, massive effects worldwide, but maybe there were some things on the smaller scale that you've also seen that give you an insight into making those predictions that you have now.
Well, yeah, that's a very good question, and I'm glad you asked that because right now there's a dichotomy in the marketplace. There's discussion about geopolitics having an effect and politics having an effect on the marketplace and where prices go. I mean, price discovery is our ultimate goal here. We want to determine where that price is going to be. The third component to geopolitics and politics is supply and demand. How many discussions have we seen over the last 7 months just on the major financial news that is having an argument about what's driving us, geopolitics or demand? I can tell you right now, from a standpoint of where pricing stands, we're seeing more seasonal trends in gasoline. We know that as we got into the drive season on gasoline and diesel, we know that the peak time for the year is the week before the 4th of July and the week after 4th of July. One of the things that I always tell my readers, and I've been doing this for quite a long time, and the current energy brief that I produce for my subscribers, I told our people that expect your prices to go up, to go higher before the week before 4th of July. And now, if you paid attention to the last couple of days, we're watching crude oil prices start to come back down again. Gasoline prices are going to come back down at the pump. I live here in Dallas, and so I've been watching the gas prices pretty carefully because it just guzzled right through my gas tank in my F-150 pickup. But those are the issues that we have to be very careful of. From a political standpoint, you're going to see the restrictions, and you're going to see the pressure from the federal government begin to relax off of the producer to make it easier for us and bring our production costs back down. That's also another interesting input. That's something that we're going to watch over time. It's so expensive right now. Not only lease payments, Jay, as you well know, lease payments, the all the different fees that we've got to pay, and then all the amount of time, and time is money.
That was something that I was going to say is, Jay, you as an investor and with your investors, how is what Tim is talking about? What is your insight on that? What are your thoughts?
Yeah, well, the big thought I have, I think the best, I'm not an economist, obviously. I'm just a business guy, and I've been around through several.
Not just a business guy, the business guy, Jay.
Well, but I see that there's a tremendous upside for natural gas, and it's at $2 now. Maybe it's at $2.10 or something. I forget. I haven't looked today, but I think there's a really big upside for natural gas because of the exporting. And if when Sleepy Joe gets out, maybe even if Kamala's in, we'll let exports. Which I know that Tim can talk a lot more about that than I can. He probably has done a terrific amount of research, and if you subscribe to his newsletter, you need to, and you'll learn more about it. But exporting natural gas, but also exporting oil, and I think that's a big part of where we're going to be in the next 2-3 years. Because I was talking to somebody, and I said, yeah, I know, but man, if Trump gets in there and drill, baby, drill, it's going to be good for service companies for a little while until it's not. Until prices start going down, and then they're going to quit drilling, and that's not going to be good. So, I think that the guy said, well, you're going to see a lot of exports. You're going to see us exporting a lot more oil that we don't need in the United States. There's a lot of Permian oil that we can't run through our refineries, and there's going to be a lot of things that we need that is going to affect supply and demand really soon. And once we do that, we're going to have you'll see a correction in the oil and gas prices. And so I think there's more upside to natural gas than I think there's upside in oil price, or there's further downside in oil than there is in natural gas, I guess, that's the right way to say it. So we're looking for some natural gas leases that we can hold on to at these cheaper prices, some HBP natural gas assets that we can participate in and hold it for the future, because we do think that there is a need for natural gas for sure. We're just going through something today that we're not able to export it.
Yeah, you're right, because of the temporary release from the freeze that the Biden administration put on there. I work with a lot of LNG companies, organizations that are putting together those LNG plants. Got a big one down in the Rio Grande Valley that's working. We've got one near Corpus Christi. We got one in Matador Bay, and there's real opportunities for natural gas. The world right now is net negative natural gas. You asked about the price. The price today closed. I got it right here. There we go, 225.10. So that's per million BTU. So if you look at where that price is, it's interesting that there's so much room for that. Once demand opens back up, that price is going to go back up, and that'll be good for the industry and for the entire world. Europe is net negative right now. The Russians are looking at what they can do to try to get back in there, get past the, circumnavigate the tariffs and the things that they're having to deal with. Crude oil will still have an opportunity because, say what you want, the country's not necessarily comfortable with an EV type of world, and that's because we had, as we talked at the beginning of the show, we had an entrance strategy for a conversion to electric vehicles. We didn't really have a good maintenance strategy within the middle of that whole thing. We have no exit strategy, and nobody looked at the fact that in order for us to be able to switch to these electric vehicles, we don't have the infrastructure in the state, in this country or the world to be able to transmit the amount of electricity that we need. And, let me give you a perfectly good example. In 2022, the 2023 figures aren't out yet. The United States of America consumed 92.2 quadrillion BTUs of electricity. That's the amount that the U.S. consumed. If you just look at conversion to AI that we have, you need to add another 40% to that. And then if you take just half of what is mandated or trying to be mandated for the electric vehicle, that's another 27% of those numbers. We're almost over 400 quadrillion BTUs of energy that's required. We can produce it, we can't move it, and we can't store it. Those are big issues.
Wow. That is. So you want to talk about Jordan? Let's talk about his radio show. What is it?
I was just about to go there.
I'm interested in knowing more about this.
Yeah, KRFE, correct?
Yep, KRFE, and out of Lubbock, Texas, believe it or not.
Oh my gosh, because you're an alum of Texas Tech, yes?
Go Tech.
Yep. Go Tech. Red Raiders.
And absolutely. It's a great little radio show. I've been doing the radio show for 20 years. And it started off as just an ag show. And then when I transitioned into energy and have been working specifically in energy, we dedicate a specific day, Thursdays, to oil and gas and energy and what we can do there. But it's in the old Buddy Holly radio station there in Lubbock, where Buddy Holly actually did the radio show. Wade Wilkes is my host, and he owns the station there. We can be heard all the way down into the middle of the Permian Basin. You can catch me in Midland. You can catch me in Big Spring. I've heard you talk about Big Spring several times. I've got some fat cows, some Akaushi fat cows down in Borden County near Gale. So I know that neck of the woods pretty doggone well. But we run from 12:30 to about 1:45 every day. I do markets and economics on a wide scale of things. Wade does politics, and then we do policy together. And we have a good readership. We've got good listenership, and that's good opportunities. I also have a podcast. I'm a preferred podcaster for energy on marketscale.com. I provide detail for Thomson Reuters about 3 times a week on an economic standpoint. So I also do, just not to be bragging, but I tried to retire and I got about 4 different jobs all of a sudden. But
I was about to say, when do you have time for anything
yeah,
else?
you just don't. You just do what you got to do. But I'm on Sirius XM Radio, Road Dog Trucking with Mark Willis about once a week, and we talk to his truckers around on the road. So it's a good. I love what I do. It's a good opportunity to get out there, and I love working with my producers. I gave a presentation at the Petroleum Engineers Club at the Dallas Oil and Gas Petroleum Club. About 3 weeks ago. And we had a good crowd, had good opportunities, and people are still very interested in what can happen and what opportunities we have out there. Jay, I'd love to have you come join us sometime we've got a men's group that meets on Wednesdays at El Phoenix on Northwest Highway in Dallas. And I call it my Billionaires Club because these are wildcatters that have been in the business a long, long time, and some of the most productive and successful people I've ever met in my life.
Oh, wow. Wow. Neat. Is that Bill Phillips? Bill Phillips comes there, and that's how.
Yep.
Is that the lunch that he's asked me to? He asked me a long time ago when he first came to work, but he hasn't said anything lately. But that's every Wednesday.
Yes, sir. Well, not every Wednesday. Once a month on Wednesdays. It's
once a month on Wednesday. Okay, I'll make sure I'm on that list with
Yeah.
Bill. Now, your radio show, you do that every day?
I do it every day except Fridays. Yes, sir.
Oh, wow. That's great. So Monday through Thursday on and just talk about how long are you on for?
About an hour and 10 minutes every day.
Hour and 10 minutes every day. Wow.
It's from 12:30, actually 12:30 to 1:40 every day, except Friday.
So, Tim, I have a quick question for you. Whenever you're looking at this audience that you've built up over time, I mean, this is, like Rome, not built in a day. But one thing that Jay and I have talked so much about, and we're trying to really bring more people in to understand the oil and gas industry and understand becoming an investor in this space. What do you think is the biggest hurdle whenever people are either looking at oil and gas and not understanding it, or looking at oil and gas and not sure if they should invest in it? I mean, Jay's had that conversation with a few people of like, oh, I want to invest in oil and gas, and I just don't even know like about it or how to get into it. And so I'm just curious as to what you've heard or seen as you've gone through your career of what those obstacles are with people understanding oil and gas and then also investing in it.
Well, let me start by saying I've got one word for you, and that's ostrich. Okay. And I'll define ostrich in a minute. Jay, just so you know, I'm a formerly licensed Series 7, Series 63, Series 3 broker. I've been involved in oil and gas deals, and I know these things. The biggest roadblock, biggest stumbling block that I see, and I've seen for quite some time, is people think this is something that you can get into and get rich quick. And don't understand the ins and outs of the marketplace, don't have an entrance and an exit strategy, and we pick the wrong money to put in an investment, and that's always a big issue. I like people to understand the overall timber, if you will, of the market. There are times when you invest, there's times when you back off. If you've been in business long enough, I can't use his name, but I'll tell you, I had a customer back in the middle 80s who was an oil and gas producer, and bless his heart, we had the hardest time telling him, dude, you don't want to invest right now. It's not the time to invest. You need to hold your cash. Let's not do this. Let's wait till this thing settles out and see if that particular project develops, and we'll see where we can go there. He'd get mad, and he'd take his money, and he'd go to Las Vegas and lose $1 million, and then come back and go, boy, I'm glad I listened to you guys. We have people like that. We want to teach them about the market. The craziest thing, when I tell people I'm an economist and I have a degree in economics, they go, oh gosh, they have an apoplectic fit. They think, oh my gosh, we can't figure out, we got to do what you can't do. I said, it's simple. I'll make an economist out of you right now. How do you feel about going to the grocery store? Well, prices are higher. You're an economist. What do you do when you go to the gas station and you pay higher prices and you say, dang it, I hate when those prices go up? They say, yeah, that happens all the time. I said, you're an economist. I said, get past this stuff. Let's have conversations about it. I love to visit with people and talk and help them understand what it means to be involved and be invested in this world. It's not an easy investment, but it can pay off really well. unless you're in natural gas right now and everybody's complaining about 3 and 4 cent royalty checks, but that's another story, right, Jay?
Exactly. You're exactly right. But also, too, is how the deal is structured. I mean, I wrote a book, and I know you've seen that, but
I have.
the upside of oil and gas investing, and it's all about how the deal is structured. Finding somebody, you trust, and finding somebody not only that you trust, but their deal is structured to where, hey, it's good for the client, because there's a lot of deals out there, and there's a lot of people out there, God bless them. They got every heart in the world that's going, man, I want these clients to make money, but because of the prospect and because of the way they structure them, there's no way.
Right.
And it's not because they didn't go to Texas Tech. They couldn't get into Texas Tech.
Well, we have Patrick Mahomes, so there. Or
there.
I went to Angelo State. We're brothers, or I think I'm a stepson or something of you guys. So
had a very dear friend of mine, Jay, that was a quarterback, played quarterback at Angelo State. His name is Tim Lust, and just one of the best people in this world that I know. He's a great guy. He's the executive director for the National Grain Sorghum Checkoff Program. So just a tremendous, tremendous person.
So, Tim, I just have 2 more questions for you, and this is really one of them. Jay and I have talked a lot about and talked with a lot of our guests about whenever they're looking at getting a college degree and investing in their career choice, what do you think what advice would you give to your younger self? Because as you've looked at your career trajectory, you're in economics, but really you're also a broadcaster, and you are a contributor with a publishing that you do as well. So, or publication rather, that you do as well. So, your career trajectory has really gone from one piece to another. Whenever somebody's looking at getting into a field like applied economics, like you have, what advice would you give to them, or alternatively to your younger self as you got into college and started pursuing that path?
I couldn't have asked for a better question. It's almost as if you're reading my bio and understanding what's in my brain. I'm very lucky in that I have done for my entire life what I set out to do when I went to college or when I moved to Texas Tech. I had the opportunity to take a commodity futures class. I was dating a young lady whose dad traded futures. And so I got involved trading futures with him, and then I got involved with the professor, became a teaching assistant, then took that into a graduate level of work. I was involved at the earliest stages of crude oil coming on as a commodity at the time as a NYMEX. And so it was, find what you're passionate about, find something that you're excited to do. I have been doing this for a lot of years, and I can tell you there's not a morning that I don't wake up and think to myself, gosh, I need to go do my numbers. I can show you up right here. I mean, I still do everything longhand, and then I put it on my computer. So I've got 4 different copies of it because I'll probably lose it. But I would tell students that are looking at this, understand the markets. I don't care what you do. We've got a energy commerce program out at Texas Tech University, and they don't teach the commodity futures class. I took it, and it's what put me in the mainstream in oil and gas, and for the opportunities that we had to do trade and other things. That's number 1. Number 2, keep it as part of your passion. Number 3, be able to communicate it clearly, not use big words, and not use the jargon that's in the marketplace that is more designed to make it look like, wow, the guy knows something, but nobody knows what he's talking about. Yes. I'd rather have people that don't necessarily understand it, but that can understand me and I understand and explain a complicated process. I helped teach a graduate level class at Texas Tech for our master's and PhD students. And some of the things that we did, we sat down and we wanted to communicate to our students that being the guy that's down here hunkered down with the pencil cramp in their hands and doing the things that they need to do is not communicating to your customer. You need to be able to look them in the face and know what you know and know that you know it. And then explain it to them so they can understand where we're going. That makes a big difference. And I believe that discipline follows through no matter what your career is. But you need to be passionate about what you're doing and be able to communicate so that people understand you.
Okay, one last question is, what do you think is going to be the biggest impacting factor in economic trends in the coming years?
Debt, bar none, debt. That's my biggest concern. 25% of the GDP that we have in this country right now is being consumed by having to pay our national debt. That, from an economic standpoint, is one of the biggest issues that I find a major, major issue moving forward. I listened to Dr. Peter Warisi talk about that a couple of days ago. And Art Laffer's very good about saying, you know what, we've got to manage our debt. Those are people that they're not contemporaries of mine. They're a little bit older than I am, and they're a whole lot smarter than I am. May not be as good looking, but at least they're smarter. But the fact is, we need to address our debt situation lest we get to a point where we can't have programs because our GDP is paying for our debt payments.
I mean, I think only with 32 or 31 trillion dollars in debt or something.
I think we're up to 34 now, believe it or not. And
Wow.
It's ticking so fast, I can't even calculate it.
I can't even, if you're looking behind me, I can't imagine how $100 bills, you could probably fill up, you could probably stack them all the way to the top of this story here with $100 bills and still wouldn't have $32 trillion. I don't know how much money that is, but that just seems like so much money. And I don't know what's going to happen. What's going to happen 10 years from now? What do you think what's going to happen 10, 15 years from now, Tim? Is it going to, we're never going to be able to pay it off. It's just one of these days we just go, all right, let's just print the money over here on this one and pay this. Do we do something like that? We'll never get out of debt.
I listened to Xi Jinping this morning early have that very conversation, and I do not support China. Don't think for a second that I do, but they're having issues with this as well. They're losing value in their one of their biggest assets, which is all that commercial real estate, commercial buildings that they have in China. It's a huge problem, and it's very difficult for them to try to figure out a way to manage that whole thing. If I look 10 years forward, I'll give you a story real quick, Jay. In 2015, I was asked to come on board as a economist for Marathon. And I flew up. They asked me to work through Marathon Petroleum in Sidley, Ohio. I flew up there on December the 18th and sat down with them in a blizzard. And the CEO walked in and sat down with me. He said, pounded his hand on the desk. He said, I need a 35-year plan. And I looked at him and I thought, I've been doing this an awful long time. And I said, I'm going to be very honest with you. I said, the man that asked for a 35-year plan is, I can't use the expression I used. Let me clean it up. He's whistling in the wind. Okay. You're not going to get a 35-year plan. You're going to be lucky if you get a 5-year plan. Look what happened in 5 years. Pandemic. 6 years. New election. Oil and gas is on the outs. Everybody's struggling, trying to figure out what we're going to do. We had so many things that are going on. I want a beginning, an intermediate, and an exit strategy for our business entities. I want to make sure we've got a good plan. I want to make sure that if we're going to move forward, that the infrastructure is there to cover if we have a transition. We have no transition plan. So we have to do all those things before we can have that 10-year plan. I think oil and gas is going to be higher. I think the number of people in this country and in this world is going up. And we've got to address that because we don't have enough food to handle another 10 million people coming into this country. We don't have the fuel to handle them. We don't have the energy resources, nor do we have housing for them. So we've got a lot of issues, Jay, that I think are real problems.
Right. That's amazing. I think, it's not going to go down anytime soon, especially our debt.
Yes.
And all the different, all the spending and energy, oil and gas, and I don't really care who's going to be. I think we are going to push oil and gas prices higher, which it gives us jobs in our careers. So, hey, we can't thank you, Dean Witter, but we can definitely thank you, right?
That's exactly right. That's who I started with, to be honest with, is Dean Witter.
Yeah, Dean Witter. Dean Witter Reynolds. I was thinking about the guy that Go Call Cowboy that did so well with Dean Witter, and he built a swimming pool. And at the bottom of the swimming pool, he had "Thank you, Dean Witter," and he painted "Thank you, Dean Witter" on the bottom of a swimming pool back in the '80s when I got my license.
I do remember.
Go Call Cowboy. Yeah, but he was a legend. But anyway, so people need to come and listen to you, or go to your website, Matador Economics, and you have a newsletter that comes out. Did you say every day?
I publish it every day, and they can subscribe online. I'll get the invitation or I'll get the subscription, and I'll put them on our daily newsletter, and then I have a weekly that'll come out tomorrow, actually, that I call Quick Facts. Quick Facts tells us what our inventory numbers in crude oil, gasoline, diesel, the distillates, what production is, what refinery runs are doing. We look at the retail prices at the pump. We look at a whole lot of other metrics that tie into this thing. I look at the Baker Hughes rig count and natural gas inventory reports, and I tie all that information up into a nice, neat little bow. And what that's for is a CEO or a business person who's going to give an interview or make a report to his supervisors or to his group, so that they have the quick facts and at their fingertips, so they can, answer the questions and know the real numbers. And this is stuff that comes, it's real simple to get. I just aggregate it and send it out.
Gotcha.
Hey, I mean, a consolidated list of information is pretty much where all of our attention span is anyway. So we appreciate the effort.
My pleasure.
Absolutely. Everybody go to Matador Economics and get with Tim and listen to Tim. Tim's very bright, obviously. He's been on the radio for 20 years, and he's a lot of good information that you can go out, but also go to Jordan Soto and listen to Jordan. And Jordan, how have you been? What's been going on with you? What are you looking forward to this year? What can we look forward to you? Anything big in the hopper right now?
I know since we've gotten this thing launched, it's been really, really cool, and especially to interview people of such caliber like you, Tim. Thank you so much for being on the show. It's been such a pleasure. Looking at this year and looking at the things that have been accomplished, I think as I look at that for myself, really just development of leadership, I think, is one of my biggest goals and one of the things that I'm most excited about this upcoming year. It's one thing to learn about leadership. It's another thing to be in a leadership position and building out a team and building out structure. Tim, I mean, kudos to you for starting your own company and really taking that on, because as I'm building out this team, I'm like, there are just things. And I mean, Jay, you too, you started your company as well, and have continued to pursue those investment opportunities and helping the people that are investing with your firm. It's one thing to learn about it, and it's another to actually do it. And you just are like, oh my gosh, there are things I didn't know. And there's part of it that you're like, okay, I'm prepared for this. And then there's the other part that is like, I'm actively being prepared for this as I'm in this. So I think all of that to say, throughout the year, just really excited to see where the year ends, and what I've learned and accomplished within my leadership position at Newton Vision Corporation. We have more clients that we're bringing on, so that is always fun and interesting opportunities and challenges in itself. And it's always such a fun time to bring new people on, bring new clients on, and tackle new projects as well.
That's great. And I'll tell you, Jordan, there's one thing I can say, and I know Tim will back me up 100%. You're going to make mistakes, but don't worry about it. Just learn from your mistakes and keep right on going down the road. I mean, it's going to happen. Right, Tim?
Yes, sir. If you don't make mistakes, you're not learning.
Exactly. Exactly right. Nobody wakes up and goes, hey, I'm going to get it perfect. And if I ever make a mistake, I'm going to quit,
Yeah, perfection is the enemy of the good, as a quote that's been ringing very true as of lately. But, it's always, like I said, always fun to learn new things and have new opportunities and challenges to overcome.
Well, good.
And let me just share one more thing, and I want you to take this with you, Jordan.
All right.
Being able
I'm writing it down.
Yeah, write it down. This is gold, okay? being able to speak what your convictions are is very important. I did that with Marathon. They offered me the job, even though I told the CEO that he was about nutty as a fruitcake, but he liked what I said and he liked my honesty, and that's very important. So obviously be a little more tactful than I am, but I'll say, take that with you as well.
Yeah.
Will do.
Transparency and tell the truth. Well, I'll tell you what, everybody. Tim, thank you so much for your time on the show today. Really enjoyed it. We've learned a lot about economists and supply and demand, and I know we're not going to know everything, but you never know what's going to happen in the future. So, and Jordan, thank you for co-hosting with me. I do appreciate that, and really excited about everything that we've got moving. And Jordan's done a great job this year of helping me kind of balance me out with people and rambling and making sure I don't ramble. And Jordan's got better questions than I do. Jordan, you just keep it up. Make me look good. All right. That's what it's all about. Thank you, everybody. Appreciate it. Appreciate the show. And until next time, thank you so much for joining.